Well, welcome to the Cincinnati Real Estate Home Show. I'm your host, Tom Giusti. I'm a realtor with EXP Realty and the Lowry Team. And this is my co-host, Phil Knabe.
How you guys doing today?
Phil, what's going on? Give me some good news. What happened this week?
Good news. Well, the rates dropped for an afternoon and shot right back up.
An afternoon, huh? So if you weren't in that window, you missed out.
That's a fact. You know, and sometimes when rates drop that fast and they shoot right back up, most lenders don't even honor the locks that they had. So,
Really?
yeah, they like to. Some of them lenders out there cheat.
That's beautiful. Call Phil.
Yeah. Yeah, because I lock them as soon as I get them.
Wow.
Them rates drop and I got a contract. Bam.
That's awesome. Good. Well, hey. We're gonna talk about some cool stuff today. We're gonna talk about the real estate market update, like we always do, the mortgage market update, which we kind of just went over briefly just a second ago. We're gonna also go over top 10 common fees associated with buying a house. So you should be pretty good at this one, Phil.
Oh yeah.
So the top 10 common fees that are associated with buying a house. And then of course we're gonna go over our baseball contest. And we have a new rule for you guys. I still have no responses.
What? You guys come
So
on.
Phil's winning. He's going to get the $50 gift card if none of you out there email us at cincinnatirealestatehomeshow@gmail.com.
How are you guys not doing that? I mean, seriously, it's baseball season, for goodness sake.
Yeah. So send in your answers. I mean, you got a good chance. You can Google it if you want, or not. Maybe you don't like baseball. I don't like soccer, so we won't be getting into soccer whatsoever.
I get those wrong anyway. So.
I know nothing about soccer, man, except for when I was in 3rd grade and played, right? So cool. So let's start with the mortgage update.
Mortgage update. So what part of mortgage do you want to know?
Everything. Give us what happened last week. What happened
last week? Rates did dip. They dropped down a little bit, so that was nice. You know, the rates are fluctuating with all the news that keeps coming out, hitting out. Rates are taking a beating, so they're not stable generally, and now it's even more not stable.
Yeah.
So it's literally today it's this, tomorrow it's that. It could go back to the lower the next day. So
how did the Fed meeting affect rates last week?
Well, the Fed said they're going to do it or jump at a whole point, right? That was the videos that I was seeing and everybody talking about, but. It didn't affect the rates on that day, right? They didn't shoot up. They didn't get out of control.
Yeah.
They stayed relatively the same. And then they raised maybe an eighth and a quarter. They just fluctuate up and down. But yesterday, Monday and Tuesday, they adjusted. They closed good on Monday, opened up Tuesday low, and then just shot through the roof by 3/4 of a point.
Wow.
So they're adjusting. Today they came down an eighth. What time is it? So a little bit this morning they've came down a little bit. So it's just it's so. If anybody's quoting a rate, be careful because it's so volatile.
Pretty volatile right now. Kind of crazy.
Yeah.
So
other than that, closing inside of 15, 18, 21 days, with no issues. We're still going through. So
good.
Yeah.
Good deal.
Cool stuff.
Yeah. So you seeing more refinances now, more purchases? What's your business like?
I have a lot of people call me and are discussing refinances. How do I get my monthly debt lower? So I have a lot of conversations in that. Some of them make sense even with the higher rates. We have got a couple that are paying some things off and it's taking their money and adjusting it, paying it back to their house. And when you walked in, one of the conversations that I had with an agent, she wanted to refinance because she wanted to pay off some stuff, move some money around, and get her house from the 27 years that she has left. I could get that down into that 12 to 15 by just splitting the monthly savings that we were giving her, even at the higher rate. She was like, "Well, that's awesome. Why would I not do that?" Yeah, absolutely. But it's a conversation. If you're thinking about paying your house off early, call me. Let's look at the different ways to do it because there's
put a plan together.
Yeah.
Even if you're planning on maybe moving, you own a home right now and you're planning on moving in the next 6 months to a year, and you've got equity in that home most likely, and you want to pull that money out, I suggest you do it now.
Yeah, absolutely.
If you're going to use that, or if you're short on funds for down payment.
If you're thinking about buying a house, give me a call. Let's look at the whole picture. Let's look at all the different scenarios. Because I could sit here and give you scenario after scenario.
Right.
So
I know.
I don't want to blow you guys up, but If you're thinking about buying and down payment's an issue, we have grants, there's other stuff, and we can move money around. So there's a lot of things we get to do to help you create a plan just for you. So
Awesome,
we
cool.
got you covered.
Good deal. Let's talk about last week's real estate numbers.
Oh yeah,
All right.
I love this. This
All right,
is my
so-
favorite part.
New listings on the market, 719 new listings last week.
719, that's the
Yeah.
biggest number yet.
719 new listings. Yeah, that's in the general Cincinnati area.
Wow.
Yeah, back on the market. So homes that have been taken off for whatever reason and back on the market, we haven't talked about this number, 125.
Wow.
Last week.
125. That's still.
I know both of those numbers are higher last week than they were the week previous.
Wow.
And then price reductions. Remember, I bring this back all the time, every time we meet, but back in January or February, there were 12 price reductions the whole month.
Yeah.
Okay, last week, 323 price reductions. So what's happening with price reductions? The market's not, prices are not coming down, you guys. We'll talk about that in just a second. The market's not crashing.
No, it's not.
I think what's going on is agents such as myself maybe aren't quite pricing homes right. I mean, the days of getting $70,000, $80,000 offers overpriced.
Yeah.
I think those days are over.
Yeah. People are not going to overpay now.
They may a little bit, but not like we were saying. I mean, it was just an automatic. They hit the house listed at 350. You got to go in at least 400. Those days I think are done. At least for a while. I think they're done. So I think that's why we're seeing so many price reductions in the market right now.
Do you have what sold? Like how many sold?
You know what? I don't.
Ooh.
I will have to put that in the comments below when it comes out. Yes, you're absolutely right. Yeah, I do not have that number, but I will get it for you.
Well, the numbers are consistently running, so that they have to be. I bet it's up compared to what it has been.
I know it is up.
So
I know it is up. Yeah, I know contracts. The properties and contracts were up as well.
that's cool.
So, yeah. So, like I said, house prices are not going to necessarily come down.
719.
Yeah.
It was what 128 the week before, wasn't it?
No, I think it was up in the threes.
Oh, it was in threes?
Yeah, I'm pretty sure it was in the threes.
Dang, I could have swore it was
The
128.
new listings?
Yeah.
It could have been.
Well, it might have been the week before though.
Yeah, we've been doing this for a couple weeks now, ongoing, but
719. That's double from last
yeah,
year.
it's going to continue.
Why? Why do you think what's going on?
The reason why the new listings?
Yeah.
I think that people are. It's summer. I think it's getting into summer into spring. I think people are in the fall. I think people are wanting to make their move. I think that's what's going on.
I think so too.
Yeah.
To get that last crash before the school starts.
Yeah.
So everybody wants to get their kids moved and get into a school district they want to be in.
Yeah. So that's one reason. Absolutely. I mean, we're continuing to be short supply. So the whole thing about supply and demand. I think that's why we're not going to see a housing crash.
Yeah.
At least not here. I mean, there are pockets around the country. There might be, because I looked back in 2008, 2009, and some numbers as far as what happened in the crash back then.
Mm-hmm.
And there truly was a crash, obviously, for those of you that were around it.
Yeah.
But why do you think that was? I brought a couple of the answers down here as far as what happened. But
For me, I think lending shifted so hard, and the programs just went off the back end.
subprime mortgages, you had
So I mean, you start shutting down ways for people to buy homes, and you put them into a box. That box is very small, so that's why I think people couldn't refinance.
Nope.
Programs were gone. I don't think people wanted to lose their house, so they just were unable to pay a $3,000 or $4,000 or $5,000 house payment when you're used to paying $1,500.
Listen to these numbers. These are going to blow you away.
Oh,
So if I looked up foreclosures, because that was a major number in the crash.
Yes.
A lot of what happened. I knew people that lived in Arizona and California. When I lived in California at the time, they would leave their keys on the counter and just walk away from the house.
Wow.
Yeah. So I mean, foreclosures in 2008 there was 2.3 million foreclosures.
Oh my God.
This is brought to you by the National Association of Realtors, so a pretty good source. 2009, 2.8 million foreclosures.
Wow.
2010, it went up another million to 2.9 million. And in 2021, last year, there were 151,000. So you can see the vast difference in the foreclosure market.
How many?
151,000 last year.
151,000.
Compared to 2010, 2.9 million.
That's insane.
Yeah. So what happens when you have 3 or 4 foreclosures on your street? Your property value goes down.
It tanks. Yeah, because Well, I thought they came back in and said that you couldn't use the foreclosures as an adequate comp. I think that was in 2010, 11, and 12 was when they made that adjustment.
They did. I think it was in 2010. I think you're right.
Yeah,
But
so.
up 2008 to 2009, they still.
Ooh.
People are losing values in their homes left and right. It is without even bat an eye.
We're definitely not in that same boat.
No.
Definitely not the same boat. It's still good. It's still okay. Has it adjusted? Yes. Has it slowed down? Maybe a little? Yes. But nothing. Well, I can't say that. 719 new listings. That's not slowing down.
No.
That is not slowing down. So you can't say that.
No.
So
nope.
I think you're right. We're moving on. And
it's going to get a lot better for buyers. There's more inventory. There's no, like we talked about, there's no automatic going over price of $40,000 to $50,000. You may even be able to ask for inspections now, for home inspections, and for termite and all that stuff. The key is to make sure you're working with a good agent that's actively looking for you, like myself.
Yeah.
So make sure that happens for you. If you don't, you're just going to be kind of out there in the wind. I'll give you an example. This morning, I was searching for a buyer of mine, a client that was looking for a home in the Springboro area. And we found a house for him. We were going to go out and see it tomorrow. 10 minutes after it was listed, it was sold. It was pending.
Oh, wow.
Yeah. So I'm not sure exactly what happened there, but
wow.
So stuff's still going pretty quick. And the average on day is about 2 days.
I think right price, a good clean home, right price.
Oh, absolutely.
It's out.
It's gone. Yep. Absolutely. So,
man, back on the market, 125, 719. That's price reductions, 323. I mean, those are some good numbers.
Yeah.
That's still activity, and that's just 1 week. That's not even a month.
Right.
So
it's last week.
Yeah, that's all right. That's good.
Last week.
Good for everybody.
So cool.
Keep it going.
So what does it take to buy a home in today's market? I mean, what points, what advice can we give you on that? First, we were talking about this earlier. Get pre-qualified.
Oh yeah, definitely get pre-qualified. That's first and foremost. Get qualified so you know what you're looking for, and don't get the just the standard credit check. Go get it all done. Send in your documents, W-2s, pay stubs, get all those things so you can get an accurate amount.
So we're talking about pre-approval then.
It is a pre-approval.
Yeah, because our underwriting is looking at everything, correct?
Yeah.
Yep.
Yeah. So those are important because you don't want to get into a house and then the next thing you know you're popping up with a debt ratio issue because the taxes came in higher than you were looking for, or your income got hit because of you can't count overtime. There's a lot of regulations inside there. The guidelines.
Don't quit your job.
Yeah, don't quit your job. Man, let's not go there. But yeah, I mean, so get qualified to the point where you're sending in the statements so you know what you qualify for. So when you do get an acceptance, your loan goes through the system smoothly, quickly, and no issues.
Because a seller out there is not going to even accept an offer without a pre-qualification approval letter.
Yep.
If you have a pre-approval or the underwriter's seen everything, probably more of a chance that somebody just has a pre-qual credit letter.
Yeah, I mean,
it's better. It's a better approval.
We do it a little bit different. We go through the whole process. I want you to be qualified, not just, oh yeah, we looked at your credit and we saw your income and that's what you said and yeah, you're approved.
Yeah.
Those pre-approved letters are not worth anything because once it gets into the system, the underwriters, they chew it up. They just beat it up. So
how often in this market should they be getting that redone? Every couple of weeks?
Well, so the rates are the big thing. So if the rates are being adjusted and you've been pre-qualified at a 5.875 or 6%, and now the rates are 6.5, 6.75, depending on what that debt ratio is, that's what's going to determine if you should be getting it redone or not. So
the lenders such as yourself should be able to tell the borrower, hey,
yeah,
if you're looking at this, this much, or rates go up a little bit, we're going to have to redo it again.
Yeah. So and a lot of loan officers don't really share that information, right? They just say, hey, yeah, you're pre-qualified up to $500,000 or $700,000 or what, $200,000, whatever the number may be, but they don't take into consideration your taxes, your insurance, the rate. Those three things adjust on every property. Right? So if the rate goes up and you're at a property that's, I can't really give you an idea, but let's say your taxes are $250 a month, and you're looking at a house over here, and its taxes are $400 a month. Guess what? That's $150 more against your debt ratio. And if you're at a high debt ratio, 45, 46%, you're not going to be 48, 49, 50%. It may kick you out of that approval, and now you look like a ding dong, and you're just putting all this money out there, spending for inspections and all that stuff. Not okay.
Yeah.
So call me.
Good point.
Call me. Let's get you pre-approved. You see a house that you like, call me. Let's work the numbers so you can be pre-qualified on that home.
Actually, yeah.
That home.
Yeah.
So you go confidently in there. That's what we like to do. That's what I do differently than most lenders.
Should you have them, because in my opinion, they should have that before they go look for a house.
Absolutely.
I mean,
what would
you deal with that?
When you're, okay, so let's say I'm thinking about buying a house. Call me, let's get you pre-approved. Let's get you pre-qualified to the point where I'm looking at your credit, I'm looking at your income, your bank accounts, and we're qualifying you at that point. And you're qualified, say, $300,000. And we're guessing on your taxes,
Yep.
We're guessing on your insurance, and we're guessing on the rate. Because the rate's going to fluctuate. And being that they're fluctuating so fast right now, guess what? It's going to adjust. So that pre-approval is going to be adjusted. But you give it to Tom, Tom's going to be like, hey, I found these houses. We're interested in these houses. I can do a search and look at the county auditor site to see what kind of tax payments they are. And then I can qualify you on those payments on that rate for that day. You're going out confidently and you know, hey, I'm able to buy this home. And if you like it, you pull the trigger right there on the spot.
Right there.
That's what we want to do. That's what we do differently than everyone else. So
it's pretty important.
Yeah,
pretty awesome.
That's way ahead of the game, you know. And all lenders across the country, you're like, I don't really want to tie up anybody's time. Guess what? I'm throwing it in front of the underwriter. Bam! Give me my approval. Let's go.
That's what you want to do as a lender, knowing that from being in lending. That's probably the most frustrating piece of it.
Absolutely.
Is getting out in front of an underwriter that's going to actually know the situation.
Once they see all the information, I order VOEs up front. I'm taking care of my borrower. Yeah, I want my borrowers to know confidently that, hey, I'm in the game. You know, and that's Option Financial across the board. That's what we do differently than everyone else. That's what I'm talking about. And I know that's such a bold statement, but and I'm sure there's some people out there that do it, but on the majority they don't. They do not do it. So
probably say something controversial here, but most of the banks are not going to do that.
No, they're not. They're not going to waste their time because you're just looking for homes. Well, I'm confident that if you go with Tom, you're going to find a home. Yeah. And that's why we're doing this. That brings me up to
my next point, right? Find a good agent that's going to work for you every day. That's what I do. I mean, this is my job. This is what I do. This is my career. Look for homes for you every day. Go out and view homes. If you're interested in something, call me, and we'll go out. We'll schedule a time to go see it. Yeah. That's really the only way you're going to know. Pictures are one thing, but unless you go see something, you're not going to know if it's going to be right for you. You just aren't.
You have to walk.
You know,
you don't buy a car unless you drive it.
Exactly. But yeah, no, you're right. You don't. You don't buy a car unless you drive it. You don't buy a house unless you see it.
Yeah.
So go out and see it. And then probably something, because you're not going to find the exact house that you want. You're not going to find everything you want in it. The bedrooms and the pool and the whatever. So, and I had somebody tell this to me, so I think it's good advice, was write down 5 things that to you are non-negotiable. Like a 3-bedroom, 2-bath. You have to have 3 bedrooms, you have to have 2 baths, you have to have a garage. And then compromise on the rest of it. Yeah. Because, there are some things that you could do in the house maybe that you could change to suit what you want, but there are some things you just can't.
Every guy out there is watching this like, I want a garage.
Exactly.
I want a pool bench in there.
Yeah. And the wife is like, well, I just want a nice kitchen and someplace I can put my plants. And
absolutely. Yeah. I'm both parties because I love kitchens and I want a big garage.
I have a lady now that she wants a kitchen that will overlook the living room so she can have parties over and be able to associate with, to talk with everybody while they're there. So
that's called great rooms now, isn't it?
Yeah,
that's awesome.
Yeah,
I love that.
Yeah, so write down the top 5 things you cannot do without.
That's a good idea, man.
And then compromise on the rest.
That's such a good idea.
So that's what I advise my clients to do as well. So, and you will find that house. You just got to keep looking.
Dude, that's different than agents. Again, I've been doing this for a long time. I mean, you could tell by the forehead and the gray that I'm old. So, people don't talk like that. So the fact that you're putting people prepared or in a situation where they're prepared for that type of, that's A+ stuff, bro.
You have to. I mean, you have to have that conversation with people. You know, they're going to expect to go find, well, I want a pool and a barn, and I want a doghouse, and I want the same color of the house to be as the sidewalk, and it's just not.
That's so cool.
That's just not going to be realistic. So,
no,
smart things, non-negotiable, and compromise on the rest.
Smart plan.
So good deal. So we passed that right on. So right now we're going to talk about kind of switch gears a little bit. Talk about the 5-10 most commonest fees associated with buying a home, because some people don't realize it costs money, right? I mean, besides your mortgage payment, besides your down payment, which is part of this list, there's other things that cost money. So you need to be prepared for that to happen. Earnest money. This is what I talk about right up front with people. Earnest money. Earnest money is kind of like, think of it like a good faith offering when you go into contract on a purchase. Earnest money can be anywhere between $500 to $2,000, $5,000 as high as $5,000. And you don't lose that money. That money is deposited in a separate account and is actually going to come right off the top of the sales price when you close on the house. But it's a good faith effort on your part. Because if you decide to go, and I'm not saying this will happen, but if you decide to back out later on for no good reason, you could lose that earnest money. That's just part of it. Of course, you have to talk with your agent about that. But that's one expense that's not really an expense, but that's something you can expect to come up with right off the bat. Your down payment. And when you meet with your lender, they can give you all the programs of what you would qualify for and what those down payments would be, anywhere from a 3.5% FHA to
Communities First 3%, FHA 3.5%. There's grants out there, so there's still some no money down programs available. So,
OFA is one of them.
OFA,
good programs.
Nurses, doctors,
that's right, doctor loans,
first responders, college grads. I mean, there's a lot of ways to get into a home nowadays. So if you don't have a down payment, call me. Let's see what you qualify for.
Awesome.
Take care of.
Awesome. Homeowners insurance. You gotta have insurance on your home.
Insurance, gotta love it.
You want to explain that one?
Homeowners insurance, such a dirty word. It's not mortgage insurance. There's a difference there.
Yes.
Homeowners insurance is if the house burns down, you're covered. God forbid.
Or if somebody breaks into it and steals all your stuff.
Yeah, I mean, the idea is to protect your home. If it's valued at $250,000, you're going to insure it for $250,000. A lot of times there's more. A good insurance person would really break down exactly what you should be covering, but it's for damages. That's what it's for.
And can you explain what their escrow account is? Because usually people put that in escrow, right?
Yeah. So escrow account is different than. So when you make a house payment, so your house payment, say $1,000, a portion of that $1,000 is your insurance and your taxes. That insurance and taxes is considered an escrow account. So you send $1,000 into your lender, they take the $1,000, stick the taxes and insurance into an escrow account, and then the rest of it goes into your mortgage account. And the separation, when that insurance comes due in 12 months, the lender writes a check, pays for it. Taxes come due every 6 months, they write a check, they pay for it. So that's such a convenient.
Can you do that sound effect again?
You know, Evan's going to be like Star Wars. But yeah, absolutely. So, you know, a lot of people are like, well, I don't really want an escrow account. Me, it's one less thing I got to be responsible for, and it's so easy. Why not take advantage?
Well, if you go over 80% loan to value, you have to have an escrow account, correct?
Technically, you can buy out of it. It's going to cost you an eighth or a quarter on your interest rate. This is not worth doing it. Don't do it. Even at 80%, they still want to have control of that.
I've always had an escrow account. Get an escrow account. You want to pay your own taxes and get a $3,000 bill in the mail? I mean, that's up to you. I don't want that.
No, definitely do it. Take the payment, get it done. Yeah. It's out of your hair, off your plate. There's nothing bad about it. They may come back and pad it a little bit. You may have 1 or 2 extra payments in there. It's okay, because if the taxes adjust or your insurance adjusts, you're not coming out of the pocket at that moment. Oh, what do you mean? I owe another $300?
Or your payment goes up.
Yeah, so it's okay to have it padded. It's not a bad deal. It's
typically
your money.
Closing, you're going to have to come up with a years in advance.
Yep, your insurance. I roll that into the closing cost.
Do you?
Yeah.
Okay. I know a lot of lenders don't.
Yeah, not a lot of lenders don't want to do it that way, but we do. It's an added benefit. You have the sellers participate in the closing, then they're kind of helping with all that piece too.
Good deal.
So definitely.
That's huge, you guys.
Yeah,
I mean, if you have so much of a down payment and money to bring, and you got to come up with that extra $1,000 or $1,200 for your first year's insurance, it can make a big difference.
Yeah, out of the box, baby. That's what we're talking about.
Property taxes. That's another expense you're gonna have to come up with. Kind of the same thing. Like it's gonna go in an escrow account. You're gonna have to pad 2 or 3 months, depending on when your taxes are due that year. But that's gonna go to be part of what your closing fees are.
Yeah.
They're not closing costs. They're actually it's your payments that you pay to the for your taxes, but they are included in the closing.
That's correct.
So you don't cover taxes in that, do you?
A lot of people. Yeah, we do. A lot of people. A lot of people. That's because lending doesn't do that. These are the things that we stand out. This is the stuff that we're doing.
Awesome.
We are lender friendly. We want that experience for our borrowers to be, hey, I love my house. Not, go through there, you feel like you got ran over.
Right.
So there,
by a Mack truck.
I mean, there is some hurdles that we face, but quite honestly, we try to build that in there to where it's, it's easy. So
that's great.
That's what we want to do.
That's awesome.
Yeah, it really does make the whole buying process smooth, easy.
Yeah.
Now, the closing cost number looks like it's gigantic when you see it. You're like, what? Oh my God, how is it $4,500? And well, like 25 of it's to this, and 15 of it's to this, and 500 is going to us, So
not all of it's closing costs.
No,
per se.
technically not all of it's closing costs, but it does be the new form.
Yeah.
Breaks it down so it looks like that. But that's a whole other discussion.
Yeah. Now, private mortgage insurance.
PMI. Okay, so man, this is going to be a long one. PMI.
Can you make it 2 sentences because I'll read it if you want me to.
Oh, you can. Go ahead.
No, I'm joking. Go ahead.
Okay, so mortgage insurance, if you put anything, let's say you put 5% down, the lending institution has insurance called PMI, right? And they literally cover that extra 15%. So the bank loans you the whole money, right? Or they pay the seller $100,000, and you're coming to the table with $5,000, and the other $15,000 is insured by your mortgage company or the PMI company. So that's why that's there. It just ensures that it's covered, and the lending institution is still only on the hook for 80%. So that's why it's there. People hate it, but quite honestly, I love it because it gets you into a home at 5% down. I mean, you don't have to come to the table at 20% no more. It's absolutely magical, And then the values are so high, and so you get equity built very, very quickly. You can always refinance, get rid of the PMI completely. You drop your payment 50, 70, 80, $100, whatever it is. It's a no-brainer. So awesome. A lot of people look at it as a negative. I look at it as a total positive because it gets you in the house, very minimal.
Well, yeah, I mean, it's something you don't want to pay, but I mean, if you actually have to be able to get in your home, then it's just an expense to be able to get in your home.
Yeah.
Yeah.
Better than 20% down.
And an FHA loan, government loan, you're going to pretty much have that the life of the.
Okay, so FHA loan, right? FHA changed their guidelines a few years back that, so FHA, the lending institution lends the money, but FHA insures it. They don't give them the money, they just insure it. So, and they changed that law, or they changed that guideline a while back that it doesn't drop off. So you definitely want to refinance out of an FHA as soon as you can. Yeah. But again, there's some curves there. FHA is a great product. It helps a lot of people get into it.
I've used it many times.
Yep, I love it. Good stuff.
Appraisal fee.
Appraisal fee.
Yeah, let's talk about appraisals.
So, okay, appraisals. So a few years, since 2008. So when that crash happened,
yeah.
Everybody was like, they beat up the appraisal. You said it was worth this and it's not. Well, here's the deal. An appraisal value is only worth whatever it says on the day that it says. After that, that value is not there anymore.
Why? In 2007, 2006, 7, 8, I mean, lenders were actually writing on fax machines or faxes, we need to get this much for this property, and appraisers were appraising it down. And that's
So you get 10 different appraisers, you get 10 different numbers.
So everybody had their favorite appraiser.
Yeah,
so give me the value, this guy won't, right? Yeah. That's what happened.
That did hurt the industry as well.
Big time.
But most of the appraisers were really good, and I mean the bad ones, they got their stuff in trouble and they're gone. But there's some good ones out there. They put a fair number on there They do their job. They do a good job. But they're no fun. I'm not going to lie. They're no fun because you're stuck on their time frame. That's one thing that we don't have control of.
So they compare your house to somebody else's house like it. If their kitchen sucks and yours doesn't, guess who the buyer is going to make the best offer on?
Yeah, absolutely.
But no, I've had people say, if I put a pool in, it's going to be worth $100,000 more. No, it's not.
No. Square footage is the magic bullet for that. If you want to get more value out of your house, you add more square footage. You change your comps, you're going to get more value for your home.
Add a bathroom. In a closet, in a room downstairs doesn't have a closet. Now it's a bedroom.
Yeah.
I mean, there's little things you can do.
Yeah. But the square footage. Every appraiser I've ever talked to, square footage is the magic bullet for more value.
Yeah.
So
you're absolutely right. Loan origination fee.
Loan origination fee. Are there lenders still doing that?
Loan origination fee? Well, you got FHA. You got to charge a 1% loan origination fee. Correct? Am I off on that?
We don't.
It's been a while since I've been in lending.
Yeah. So you have when you buy
points, right?
Yeah. That point. If you're getting a specific product and the rates are adjusted or it doesn't qualify, you're able to. How do I want to say that? So let's say you're buying an investment property. So you're buying an investment property and the rates are 6%, but it's going to cost you 2 points to get that product.
What is a point?
A point
for our audience.
A point is something that you pay to the lender to get that product.
1% of the loan amount.
1%. 1 point is 1%. Yeah. So, and I whenever I have to charge a point for a product, it absolutely kills me.
You shouldn't have to. I mean, I have people that have asked me, what if I pay points on it? I don't want to pay points on a loan.
Yeah, no, you don't want to if you don't have to.
It'll cost you. It'll take you 6-7 years to recover the amount that it's going to save you. So it doesn't make any sense.
Investments there for a while. The investments were taking a big hit. They were paying 2 and 3 and 4 points just to get the loan.
Yeah.
And the downside is it's not like it's going to us as a lender. We got to pay for it as well, and that's where that comes from. And that's no fun. So. It's adjusted back down, so I don't get to control them, that's for sure.
It's by buying down the rate with points.
Yeah. So that's the curve.
0 cents.
Yeah.
Title search fee.
Title search fee. Now you're talking about title work. So the title company, they go out and they do a 40-year search on your property, and they make sure that every step of the way people have signed off and done their job to make sure that that property is owned by you. That's what that title search fee is.
Now, there's what's called owner's title insurance and lender's title policy. You have to get the lender's policy, but owner's policy is completely optional.
Yeah.
What is the benefit of getting an owner's policy?
Okay, so the lender's going to protect themselves on that. The owner side of that is, so let's say down the road, something came up or someone filed something against your property that's not accurate, and then they have rights to the property before you do. That's a big curve. That's what that insurance covers.
Where you see a mechanics lien come up for somebody that didn't pay the roofer 20 years ago.
Yep.
That's not your problem. That's what the insurance is for. It insures
exactly. It ensures that you're in first position and not somebody else.
Yeah.
Because it's a weird system. So if you bought it from John and Mary 70 years ago, and let's say Mary passed away and John sold the house and something popped up to where they couldn't be selling the house because they didn't have Mary's death certificate or whatever to accurately say John could sell the house. That's what that insurance covers. It fixes all of that. So
what about this new fraud that's going on with title fraud? You know anything about that? You hear about it on the radio all the time.
There's a lot of stuff out there. Always get insurance. If you're buying a house, put lender's insurance on it. Put owner's insurance on it just to cover yourself. There's a lot of fraudulent things. To go into a list of them, I'm not 100% on what all they are. Okay. But there's where people are going in there doing quitclaim deeds, and you got to protect yourself. So
we'll have to talk about that on another show.
Yeah,
probably a good one to do. So
that'll be a long show.
We'll bring somebody in that I've got expertise in that. We keep saying bring people in, but I can't get a hold of people, so
I
I can't bring them in
I would do that
until I get a hold of them, right?
I will start bringing some people in because that's a great topic.
You know who you are, too, by the way.
Oh, yeah? So title companies, we'll get some title guys in here to talk about some of that stuff. They probably will not want to talk about it, but we'll twist their arm.
Yeah, it seems to be an issue. So
Yeah.
home inspection fee.
Home inspection fee. People do not pay attention about home inspection fee.
But you gotta get a home inspection. Just gotta get one.
You're getting ready to spend a ton of money on a home. Get a home inspection. It's $400 or $500. You know,
They
it's
pull
just
it
part of
full color. At least the company that I use, full color report. The ones that my clients do, I go over with them when I get a copy of it, and we go over it. And it gives my wife and I, when we bought our home, there were some things that were, kind of questionable. So we put together a list of things that we could work on over the next 2 years. And hey, we're going to do this. We're going to put this in. We're going to do this. Fix the gutters. Do whatever. It just allows you to know exactly what's going on with your home before you move in.
Yeah. No, I recommend it. Definitely, you want to know. You might not get everything fixed. Seller might be like, go away, but I want to know going in.
Yeah, you want to know if your air conditioner is going to go out in the next 2 weeks. Yeah. So get a home inspection. Usually about $500.
Yeah, I think $400 or $600 seems to be the magic equation
there. And closing costs.
Closing cost. There's no way around those fees. You're going to have closing costs. You're going to have title fees. You're going to have your escrows, your insurance, lender fees. Those are all wrapped up into that closing cost.
Underwriting, processing, you guys do
underwriting,
all that
processor.
Yeah.
Those are the only fees that we charge. We have underwriting and processing. Those are the only 2 fees that we charge. We have a very low closing cost. Excuse me. Is it the lowest in town? No, I don't think so. But we are. Lowest is a dirty word.
Yeah, because with lowest, you don't know what you're getting.
Yeah. But
it could take you 6 months to close, but you get the lowest.
Yeah, I hate lowest. Lowest is a dirty word. I try to stay away from that, but we are very compatible. I like our closing cost.
Good.
It does a good job. It helps people. It keeps the cost low. It's a win.
Good. Awesome. Win for everybody. That's awesome. Well, good deal. Any last thoughts on that?
No, this was a long one.
Yeah.
I like it.
So we're gonna move right into our baseball
This is my favorite
contest. Maybe you make the call. So once again, you know the answer. Write into Cincinnati Real Estate Home Show at gmail.com. Right now you'd be winning if you send in the right answer because there's nobody else in there.
Okay, I got a question for you.
Yes, sir.
So should I drop names?
What do you mean drop it?
Steve Hazlett. You should be answering this.
Yeah. Good point.
There, he's gonna be like, dude, why you throwing me on there?
Matt Davis, you should be answering this. Matt Davis is a lender, so.
Oh, really?
Yeah.
Okay.
Good guy. You guys should be working together.
Oh, that's awesome. Yeah, there's several people out there that I know that are baseball guys that should be answering this.
Yeah. So pay attention. Here we go. This is kind of fun. Kind of take the little bit of a different turn here. So, last week's scenario was this. So there's a batter up. He bunts the ball down the first baseline. Pitcher picks up the ball and throws it to first base, hitting the runner in the back. The runner is running just inside the foul line. What is the call?
I think the runner.
Phil.
I think the runner is safe. Is what I would say.
He is out.
He is out.
He is out. If you guys notice, on up the first baseline, you'll see a little box that goes about halfway up. It goes just outside the first baseline and up. That's exactly what this is for. That runner has got to be running inside that box. If he gets hit with the ball, it's interference. The runner's out.
You said inside the foul line, so that would be inside the diamond.
Right.
Oh man, trick question.
So actually, the runner's got to be running outside in that little box.
I gotcha. Yes. Okay, so if he's outside in that box or outside the foul line, he's safe at that point, right?
It's nothing. It's absolutely no call.
But if he's inside the baseline,
he's interference. He's out.
Wow. Okay. Dang. Well, that means I'm 2 for 3.
It's all right. You're winning. He gets a $50 gift card. Nobody else is. So you ready for the next one?
Yeah, let's do
next
it.
week's all right.
Let's do it.
So here we go. Runner's on first. Pitcher's in the stretch position, holding the runner on first. He throws over to first base to pick off the runner. Throws the ball on the ground, and it goes into the dugout. Where's the runner placed? There's actually 2 answers to this question. It's a depends question, so I'll read it again. Runner on first, pitcher's in the stretch position, throws over to first base to pick off the runner, throws the ball on the ground, it goes into the dugout. Where is the runner placed? Don't answer.
I think I know this one.
All right. Well, thanks you guys for joining in. Don't forget to like and subscribe and share and tell all your friends and all that stuff. If you're getting value out of this, well, let us know. Make some comments. Let us know what you think. If you have any subjects or topics you want us to talk about and bring up, or anybody you want us to bring on the show, let us know. Make some comments.
Yeah. Start reaching out. Actually, a lot of people have seen it because I got people calling me and talking to me.
Oh, that's cool.
So,
nobody's called me about it.
Really? Oh, I've had some people call me and talk to me. So, I mean, there is that. So that's a plus.
So you guys got to call in, or otherwise she's going to replace me with somebody else.
That's
Thanks,
awesome.
you guys. This has been the Cincinnati Real Estate Home Show. I am Tom Giusti, your host, the EXP Realty, the Lowry Team. This is Phil Knabe with Option Financial. Appreciate you being here. We'll talk to you next time.
See you guys.